Well, also background check because the 2-month revisions to the prior made the model look a little better than it's been performing too as well. So
didn't you have the feeling that it's just weird the way this works, that you can almost feel the standard deviation? It always just seems to go to average out. It's been weak the last couple of months, and here we are, 220. No
back over. Yeah, I think that's right. And it looks like a pretty healthy report, Joe. And I'm looking here as this, when I look at a report like this, I look down the line for positives and negatives, and I'm seeing a lot of positive. I'm seeing goods producing up 25,000, construction up 16,000, just a couple negatives in there. So what you see a broad-based job gains, 36,000 leisure hospitality, although the government did add a lot with this 35,000 number. And again, you're not getting the weight. Let me just throw this to Jeff.
Yeah, I mentioned at the onset. Yeah,
222 hired, room 222. Remember that
yes,
show,
I
right?
do.
Yeah.
Hired, but just 0.2 on the wages.
Yeah, and 0.2 actually is a 0.153. It's a weak
just
point.
Barely.
It's a weak 0.2. So, the wage number was not particularly strong. It's partly, why you're not getting a bigger reaction on the bond market.
Actually, Aaron, all week long, actually for about a month, we've been arguing about whether we're at full employment and that people can't find people that they want because they're not trained properly. And then we've still got people saying the participation rate shows that there's a lot of people that want more work that are still unable to find it. We've had this narrative, this argument about whether we're at full employment or whether it's still weak. No, you were saying it's really full, but there were 222,000 people able to find work.
No. There's a lot more people that want work. There's no reason for the Fed to choke off this economy.
Oh, okay.
I hope the market doesn't take that reaction. We have room to run on both the rate, on U6, which I'd be interested to see if that stayed constant. But we have a lot more room to run in our economic growth. And frankly, we have more room to run from Washington's policy because we've seen very little over the first 6 months to actually move things forward. But I'm thrilled that the real economy is doing a lot better than we previously thought. The revisions in this big number make us feel like we're more in a steady range.
U6 ticked up from 8.4 to 8.6. A lot of volatility in the household report. 361 on the workforce, so people came back into the workforce. Employed went up by 245. The unemployed also went up. That's why we don't follow these numbers, but broadly you can follow the unemployment rate and the U6, which is the broader measure of unemployment. It includes people working part-time because they can't find full-time work. It includes people who are discouraged and left the workforce.
So Rick, last month you were over 200 and it didn't happen, and now it seems like you might have been onto something last month.
3 months running, I've been on the high side. The way my model goes, I end up generating two numbers. I toss one out. The number I tossed out was 224. That's the way the ball bounces. But I'll tell you what, looking at the number, the dollar index has gone into negative territory. Interest rates have dropped a couple of basis points, and the Dow futures have jumped about 40 points.
Wow.
That pretty much says it all. There is still this mentality that when things are kind of, middle of the road to good, we actually see equity markets doing better. That's not the way it used to be. Don't look at the fixed income markets and try to gauge whether it's a good number or a bad number. Yes, we did see, I think, disappointing wages, a work week, all of that. But in the end, almost 60 basis points booned is what our 10-year is looking at. The boon's looking at what Draghi's looking at. Draghi's looking at what Kuroda's looking at. And we hope they all take a vacation, a nice long vacation.
Michael, from where you're sitting, what does this indicate about the underlying economy?
Well, I think it indicates that the underlying economy is doing what it has been doing for years and years. We are a 150 to 200,000 jobs per month economy. If you look at the 3-month average and the 6-month average, taking into account today's number plus the revisions to the last few months, we're right in that 150 to 200 range. So I see an economy that is solidly performing month after month in a very stable way. I agree that there's still room to run. I think the unemployment rate, the U3 can go lower than it currently is. I'm disappointed with wage growth, but wage growth suggests that that we haven't hit full employment yet, and that there's still some slack left in the labor market, and there's still an opportunity to pull some workers in who have left.
Do you notice what's happening here? You have a conservative economist and a liberal guy.
I heard Aaron. I know. I was surprised.
Both saying, let it run.
I know that, but
we care about the people, Steve.
Will it run to 3% GDP? Like the Drudge says, great again, up 220,000. They always say that, great again, saying we're making. Has this got anything to do with less regulation, animal spirits, getting? Does this increase the likely? No, that's probably Aaron.
This is the same economy that Trump inherited. We're at 2% growth and 180,000 jobs.
Now they're separating.
Let them go. Let them go. But Aaron, what do you think of the possibility that Trump is fudging the numbers here? Isn't that what the liberals should be talking about now?
Come on. When I was there under Obama, you guys said the same thing. The BLS are serious professionals here. Well, Joe wouldn't if the situation were on the other way.
But Aaron, you're going to have to change your tune if it does do 3%. If you do get a year.
Sure, we had 1.4. We had 1.4 in the first quarter. Bring me on after back-to-back threes.
Okay. I guarantee I'll remember, and I will bring you back on it. Michael, what's the top number we can do in this cycle on GDP for a year, annual?
Well, I mean, it's a hard question. I guess we'll see. I'm more optimistic that we can get to 2.5, 2.6. I think a lot of it depends on policy, and a lot of it depends on the ability to do a big tax reform. A lot of it depends on the ability to accomplish some real policy goals, to do some serious deregulation. And it's anybody's guess what's going to happen up on Capitol Hill right now. But we could get a point of growth per year for 10 years if we did a major serious tax reform. Let's try and do that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.